All right, y'all. Welcome to Winning Lending Strategies with Allie Frye. If you don't know her yet, you should get to know her. She is with Guild Mortgage. She has been a resource to us here at Choice and our agents and our clients for years now for so many reasons. She is great at what she does. She provides really competitive rates, but most importantly, for every aspect of the transaction, beyond, beginning, doesn't matter. She's here to be resources to us. And this is a perfect example of that. She loves to share her knowledge, tell us what's happening in the market, what she's coming up against in terms of challenges or wins with clients, rates that she's seeing, all that fun stuff. So thanks for tuning in today. She will go through some presentation stuff, but as you have questions, just hop off and unmute and ask away or share your examples, what you're seeing in the market. This is a collaborative effort. So, Allie, thank you for doing this today.
Of course, happy to. Thank you. Yep, definitely put any questions in the chat or get off mute, show your faces, all of the things. Um, so I'm going to go through some things. Hopefully that will bring up some talking points for y'all and some questions. But first, I always want to go through some kind of creative financing, maybe something that can get a client you have off the fence. And today I wanted to talk to you guys about kind of like in-house and outside down payment assistance programs for not only first-time home buyers, but also repeat buyers as well. I feel like the beginning of the year is usually the year that, or the time of year that a lot of people come to me and maybe they're thinking about buying later this year or even into the next year, and they want to hear about, some programs that they don't have to come out of pocket so much. And we have so many options. So a lot of times we can go through them and narrow them down based on, their specific profile because each one of them has their own kind of requirement. Um, but we have two in-house that are very popular, and one is the zero down, and the other one is the 1% down. So, zero down for us, we can have either an option to finance 3.5% to cover that FHA down payment that can be forgivable, or we have an option for the 3.5 or 5%. So that way you can add a little extra to cover some of the closing costs. And that is a repayable. So it's kind of a second lien that adds to their monthly payment and gets them into the house with little to no cash out of pocket. Um, this one specifically is not a first-time homebuyer requirement. So if they've owned before, then this is a really good option. And there's no income limit. And that's kind of where a lot of the state down payment assistance programs will hold people up as if they have an income limit. Like I said, it is an FHA loan program. And this one specifically doesn't allow manufactured homes. So just kind of keep that in mind. And then for this one is at 620 minimum credit score, whereas, a standard FHA program, you could get it into it with a 580. Um, so that's kind of the general gist of this program. So I definitely always go over this with people that are looking to finance their down payment and or some closing costs.
And
Um,
Ellie, I want to
mhm.
jump in real quick. Maybe
Yeah.
this is a stupid question, but I don't know what does it mean forgivable or repayable?
Yeah, so repayable is it's going to have a payment to it. So essentially, your first mortgage is just your regular, principal and interest and escrows, mortgage insurance. And then on top of that, there'll be another second loan. So say for, 15,000 or whatever the amount is for that percentage. And you're going to have that monthly payment to that loan as well. Um, Most of them will be interest only. So a lot of times I will talk to people about how, the home appreciates and it gets you into the home now. And this is for like all down payment assistance programs. And then by the time they want to move or sell or whatever, the home, hopefully will have appreciated enough where your equity has been built back and you won't be like coming out of pocket because of that second loan that you have financed originally to get into the property. Now, some of them are forgivable. So for this one specifically, you just have to stay there for 36 months, so 3 years. So if they're okay living in this house for 3 years, then after that 36 month, it's completely forgivable. So that is basically no time at all compared to the NCHFA's program, which is you have to stay in the home for 15 years. And it does knock off, it forgives 20% each year, years 11 through 15 for the North Carolina one. But this one, 3 years and you're done and it's completely washed away. So it's really, really good. Yes, there is PMI on all of these programs since it is less than 20% down and FHA, and it's an FHA program, and FHA will always have PMI regardless of the down payment. Now, if you do some of the other conventional down payment assistance programs and they do put 20% down and they take the assistance to kind of just bump it up more, then there wouldn't be PMI. But they do have to put the 20% down on the conventional ones. FHA will always have the PMI. Good question. Um, so the 1% program is completely Guild in-house program. It's a 2% of the purchase price, so up to $5,000. The borrower does have to have a certain income limit, so 80% of the area median income for the county, which you can easily look up. So we can easily check that. And the borrower does have to contribute 1%. So essentially, if you're a first-time home buyer and your minimum is 3% down, you put 1% and we give you the 2%. So that's kind of how that works there. It's a 620 minimum credit score and it's completely forgiven. So that $5,000 is never paid back. It's just, um, with this one specifically, too, a lot of times we've seen where the borrower, wants to stay at a certain payment. And a lot of times we can get them to that payment better when the seller is willing to give a credit. And that way we can buy down the rate with the seller credit and kind of keep the borrower's funds out of it. Um, if you can't get a seller credit for your borrower, then we can look at this option, and that way we can actually use that $5,000 that we're giving them to then buy down the interest rate and help them with their monthly payments. That's a kind of another way to consider using that, instead of just, even if they have the money to put down for the full 3%. Hopefully that makes sense. And then this is kind of just a good chart that shows a lot of the other ones. Again, we have so many out there, and these are just a few of them. There's all different kinds, like conventional and FHA, so you're not kind of pigeonholed into just an FHA program. There's certain ones that do have that income limit again, as you can see, the home ready and the 1% down. and then that conventional down payment assistance. Now, this conventional down payment assistance is a 4% of the purchase price. So again, that can cover the down payment and some closing costs, especially if they're a first-time home buyer and they just put 3% down. That other additional 1% can cover some of those closing costs. It is repayable, this one. But if somebody has a better maybe credit score or whatnot, and it just is a better rate and whatnot for conventional, but they still need that down payment assistance, this is a good one. And I talked about the North Carolina down payment assistance programs that we partner with. Um, and that can be an assistance of, 3% or um, flat amount of 15,000, which can cover obviously both closing costs and down payment. Any questions on any of that you see here? Um, so essentially, if you have somebody that's kind of like, oh, I can't buy now, I don't have enough cash, um, this is definitely something to bring up to them, and you can see that, there's options out there. That's the biggest thing I think is to really let the buyers know that it's not impossible, that there are options. And even if it's not right now, to get them some information and get them to where they need to be, even a year from now, we can make that a goal and a reality. Um, Another thing that I think, and I think you guys will all agree that, rates can be a hindrance to people buying houses as well. So one of the things that I do on my pre-approval call every time is to really talk about rates and not just ignore them and say, they are what they are, but really kind of educate them on where they've been and where they are and why they're there they are today. So I always share my screen to show my go-to Mortgage News Daily. That is, and this I didn't sorry, I didn't change this rate or this date, but this was pulled from today, obviously, or yesterday, I should say, where it shows 6.11 is the nationwide average best case scenario. So it might not be your client specific rate, but it should give them a general idea. Obviously, this is again nationwide, it's an average, and it's based on like 20% down. So it could factor a little bit, but that kind of gives them an idea of where they actually are versus what they might be seeing in the media or on Instagram or TikTok or wherever. Um, there was a lot of hype and things out there, around this time period where they dropped so much, and people don't talk about how they crept back up. So people still expect them to be down here below 6% when in reality they crept back up. And yes, they're coming back down again. But this is just a 1 month view of where they've been and where they're going kind of thing. So this always, even just this one visual that I show my clients and your clients, that they kind of get a better idea of, what rates are looking like. So it really helps them kind of come back to reality per se. The other thing about rates that we talk about are options that, you guys can negotiate with your clients as far as seller credits. Like I mentioned before, seeing a lot of those come in. Hopefully we continue to see that, even though it's kind of, we're going into the spring market. But the idea here is to kind of give them an idea of what they could negotiate and get their rate to. This is obviously just based off of this 500,000 purchase price and a $400,000 loan, just to give you some ideas. But easy $2,000 credit can save them $35 a month, which doesn't seem like a lot, but it adds up and it is a lot for a lot of people. And even just to see that five makes people so happy, as I'm sure you all are aware. So, be the hero and try to get like even a couple $1,000s for a seller credit, and it would help significantly. And it helps so much more than reducing the actual list price that, you're offering too. So, a lot of clients have even gone up, 5,000 and asked for 5,000 to make it. So really it's staying the same for the seller side, but that extra, 5,000 in that example will help them significantly in their actual payment, which is what is normally everyone's number one priority. So to kind of get your clients to into my hands so I can explain all of that to them so you guys don't have to. I do know that I preach the power of connection to a lot of you, and I appreciate you guys making the introduction into that warm intro so nobody feels like they have to reach out to a stranger. Usually, group email or even a group text is the best way. It gives them that smoother transaction. I just take it from there. You know that, I've talked to the client, and we kind of just go from there as far as my process. I know a lot of you have your own system set up and you know that how important that is. I think it makes every transaction just that much smoother. So here's kind of just like a little breakdown of what my system is and how I go through the process. Like I said, the group text or email. I always jump on an initial call, usually is anywhere from 5 to 15 minutes, just to quickly get their, goals and set up their expectations as far as the next step, which is the loan application. I feel like people that send them straight to the loan application, it's doing the client a disservice because sometimes they don't know what to put in, or if they're unsure of the purchase price and they have to put that in, they're not sure, if they should. So just setting up the expectations and having that good introduction in the initial consultation call makes such a difference. Um, they submit the application, and then, like I said, I do a Zoom or Teams video pre-approval call, and that way we can go over all of that information about the rates and as well their specific scenario, like their closing costs and that sort of thing. And that way they kind of know their numbers, they know the overview, and they're just that much more confident in submitting an offer. Um, as they go through their house hunting journey with you, they can always send us specific properties, and that way we can update that estimate. And again, they'll know exactly what to expect as far as payment and cash to close before they submit that offer. And it's just that much easier for you to do so. Um, and then you always can reach out to us as well as the buyer to update that pre-approval letter so it matches whatever you guys decide to offer. I always reach out to the listing agent as well and just give them a quick, everything looks great. You don't have to worry about the loan side. And as you know, I'm sure if you've had a listing and had a call from a lender like that, it just makes everybody feel, again, that much more confident. You also would expect weekly updates from me as far as the loan process goes through contract to close. So you never are guessing what is going on. Um, when you are submitting offers, I definitely think if you're not doing it already, to make sure myself or whoever your lender is or whoever your buyer's lender is, that they are aware of what's being submitted. A lot of times, especially if it's not me and if it's another random lender, you don't know the details of their, debt to income ratio. And a lot of times buyers will get a pre-approval letter just kind of spit out to them, and it's not based on maybe they're buying a home with a higher HOA that could affect that DTI. Um, and you're putting in an offer, and it comes back to the lender, and it won't work based on the actual specifics of the property. That's why I stress so much to the buyers to reach out with specific homes because every home is a little bit different than the initial worksheet that we send out. Any questions on that? Or any questions on any of that? Kate, you got anything?
I don't have any questions. I'm going to give it just a minute. I'm curious for those of you that are here, if there's anything you're running into with your clients, what are the common questions that they're asking you, especially related to headlines when it comes to financing? Um, just anything that comes up in terms of financing. Would love for you to share it here. But Allie, thank you so much for doing that. I especially love that you shared your process of communication. I know we know that you take good care of them, but it's nice to see exactly what that process is. So if you didn't get a chance to, I would just screenshot that and just have it in your notes when you're talking to your clients. And then that way, um, when you're telling them what to expect, you can tell them like, hey, you're going to hop on a quick phone call at first, then you're going to do your application, then you'll have a longer call. Because I know my clients were always the type that if they didn't know what to expect, for instance, a 5-minute phone call at first, they might say, oh gosh, that was so short, like felt dismissed. And then they just pass me to an application, be like, well, yeah, they don't know what they're working with yet. So it will be a short first one, and then they'll go more in depth afterwards, just having a benchmark personally so you can set your clients up for success and what they can expect, I think is really crucial. So thank you.
Mm-hmm.
All right, you guys, those of you that are attending, you got anything for us? Okay. Allie, thank you for doing this today. Endlessly appreciate you. Thank you for being there for us and our clients. I'll be sure when this recording goes out that Allie's contact information is on there. She is here whenever you've got questions, and inevitably it's when you're in the field. So don't be afraid to reach out. This is what she's here for. Until then, have a great day, y'all. Thank you so much.
Thank you.
Bye.
Bye.